And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. As always, the show where we bring you where the action is in the broader markets. And a little bit of a dicey week, but certainly not as volatile as prior periods. But there certainly were enough cross currents to keep the shortened week interesting. As always, we're going to go ahead and take a look at these broader markets, see where they stand. Also, we're going to go back and look at historical precedent relative to other negative and, in this case, bear market periods. What has worked? We're seeing an awful lot of similarities that I think you may find quite striking. And then also, as usual, we're going to take a look beneath those sectors. But let's talk about some of the economic data last week that drove price action. We did see quite a surge in retail sales data, all about consumers getting in front of those expected tariff price increases. So that is expected to impact Q1 GDP. However, it's still not looking great for those Q1 GDP numbers. Also, last week, Fed Chair Powell's comments were very impactful. He did state at a meeting in Chicago that he is on the anticipating that they are going to have to push out any possible rate reductions, all about the unknown known as the tariffs, and then hence inflation. So that really caught the markets off guard. We did see a sharp pullback on that day. Of course, Trump came back roaring as far as not speaking terribly highly of Powell, but the comment still stands relative to interest rates. We are going to take a look at that. And then also today, the markets were closed. However, it was discussed or revealed, or Trump certainly made a comment that he is in talks with China, and according to him, they are close to making a deal. So that could, of course, impact the markets on Monday. Pretty light calendar as it relates to economic data next week. However, earnings season is going to pick up. We're going to talk about some of those names that reported last week. Always want to keep an eye on that because while these tariffs are front and center, and inflation expectations are also on the top of everyone's mind, these earnings reports are also impacting the markets. So we'll get into that. Let's go ahead and take a look at that S&P 500 and again, see where did we close for the week. And here we are, daily price chart. And on this S&P 500, a couple of factors. We can see that we did close above this 10-day simple moving average, certainly what you want to ideally see. However, that moving average is trending downward. So in essence, we are finding support at a lower level. The S&P was down about 1.5%, and we do still have a negative RSI and a negative MACD. This is that relatively flat lack of momentum, unlike the prior week with that announcement that the tariffs were paused. We had a sharp advance. So net, we are still sitting here in what I can only call nowheresville because we do not have that follow through day quite yet. And that is that signal that would tell us the possibility that at least a near-term bottom has been put in. However, there's still a lot to discuss despite the overall negative bias in the broader markets. And of course, we will get into that. Let's take a look at the Nasdaq, hit harder, down over 2.5%, but very similar dynamics clinging to that downward trending 10-day simple moving average, negative RSI, and a negative MACD. We'll get into the areas that impacted the NASDAQ quite negatively as we move through this view. Let's begin by taking a look at those 11 sectors in the S&P 500. We're looking at a 2-month daily price chart view. As always, it is sorted by that relative strength indicator. You want to stay on top of those industry groups that are relatively outperforming the S&P, which is sitting here in this lower quartile. Most important during this period is going to be when you begin to see non-defensive areas begin to bubble up. So by that, we talk about defensive. It's going to be consumer staples up here at the forefront. Let's take a quick look because it certainly is quite healthy looking, certainly relative to elsewhere in the markets. This is the consumer staples chart. You can see that we are now above that 50-day simple moving average. Nice Friday rally or Thursday, and we do now have a positive RSI and a positive MACD. Utilities also sitting up here at the forefront. We'll get into some of those names that are experiencing this nice V-shaped recovery, and areas you'll want to be aware that are not generally participating in this uptrend into utilities. REIT stocks faring well. All of these do offer a nice high yield. And then industrials, this is an area that is still in a downtrend. However, it is perking up. We did get that MACD crossover. RSI still sitting here in negative territory, but there is one particular group all about Trump comments relative to budgets for next year that is bubbling up, and I've added one name. I will be adding another name to that industry group in the industrials so that you can participate in the uptrend. Materials up here at the forefront, and in our next segment, we'll take a look at those sub-industry groups, and one in particular that is continuing to keep the basic materials group certainly not. They were flat for the week, but not negative, similar to the broader markets. And as always, we want to be on top of those areas that are underperforming. XLY is consumer discretionary, down about 2.3%. You can see that downtrend. We do have that 50-day poised to cross below the 200. That's known as a death cross when a shorter term moving average crosses below a longer term. We did experience that in that mid-March period, and then again late March, 10 and 21 day moving below, and then even earlier back here at the end of February, that 21 and 10 crossing below the 50-day. So you can see it is a secondary indicator, but certainly worth noting. So we are continuing to see quite a bit of deterioration. Certainly Amazon and Tesla's move, they are heavyweights in this particular industry group, also pushing this sector lower. And also of note here, we can take a quick look at technology. That was the worst performer last week, down 2.8%. We'll take a look at two really important sub-industry groups in here. And again, here's that gap down. This is on Wednesday into Thursday. And again, Powell's comments relative to the reduced outlook for continued rate cuts is going to hurt these high growth tech stocks quite a bit. So let's go ahead and take a look at some of these sub-industry groupings beneath those 11 sectors. And first up here, again, RSI, that relative strength indicator, it is in descending order, and front and center gold stocks, GLD, hitting another new high last week. It was the best, one of the better performing sub-industry groupings, up 2.8%, sitting up here in the forefront. Also, we can take a look at some of these other areas that are up here. Volatility, I will tell you that it did dip last week, but we are still rather elevated. We're up here at about 29 and a half. Levels above that 18 are viewed as elevated. However, ideally, we want to get that volatility or VIX index to continue to come in. I'm talking here or showing you the August period. This is during that yen crisis and also an interest rate crisis as well. And you can see that we got down to about 17, and then we did have a nice August into September advance. So keeping an eye on that volatility index. Also of note, we can take a look at XRT, and it actually was sitting here flat for the week. It did have a nice rally, 2.4% on Friday. So keeping an eye on that, but net that downtrend still remaining very firmly in place. Also KRE, and it was up about 4.5% last week. And this is an area where we are seeing a bit of a pickup. These bank stocks are the first to begin to report their earnings. And by and large, they're coming in with good numbers. It's going to be a case-by-case basis with these bank names, but keeping an eye on that, still down and out net overall. And then remaining in this lower quartile are semiconductors, SOXX, down about 3.5%, a bit bouncy. We had an advance earlier in the week in NVIDIA that gave it back up. So what we can do from here, I'll share with you a company that did major top chip manufacturer reported earnings last week. This is TSM, and not a whole lot of movement here in response. So this overall group with the bellwether TSM remaining in a confirmed downtrend. Now, from here, I talked about taking a look at historical precedent. So what we're going to do is go ahead and take a look at that 2008 into 2009 bear market. And at this juncture, I was highlighting the fact, similar to Wednesday a week and a half ago, when we had that big move up after Trump paused those tariffs, was in line with a huge advance that we had back here in 2008 in anticipation of a Fed rate cut. We had an 11% rally, in essence, highlighting that these bear market periods will often see your highest rally days take shape. Also of note here is what's called that follow-through day, a system that I use as it has been very, very helpful in identifying the market bottoms of each bear market. Now, it's of note that every follow-through day does not always advance to a full-blown bull market, but the news that surrounds that follow-through day is going to be quite instrumental as far as having a sense that that outcome could be long-term relative to a new uptrend. So also of note, what I wanted to share with you were a couple of names back in that 08-09 period that were the top performers. And then we'll go ahead and take a look at those stocks currently. First up here is Vertex. This was a top performer. This chart I'm going to be showing you is that 08 into 09 period. And here VRTX is a biotech name. And you can see it had a very sharp move into, this is from December into March of 09. A little bit of a dip, but really recovered much better than the broader markets, and then it did continue its advance. Let's go ahead and take a look at Vertex at this point in time, and you will see that the stock is sitting up here quite nicely, certainly relative to these industries we've been looking at, the broader markets. So here we are with VRTX trading back above each of its moving averages. We can see that MACD poised to turn positive, likewise with that RSI. This stock has a number of products that are seeing high demand, and at this point in time, their most vibrant product has to do with cystic fibrosis, and the company came out earlier this year and announced that they are seeing very increased demand for that product, which is helping the stock remain up there. Also, we can take a look at some other names that did outperform during the 08-09 bear market. And let's go ahead. This is that 08 into 09 period for this stock, McDonald's, and we can see that certainly into the end of 2008 into 2009, we did see a significant rally off of these lows. However, it did eventually get hit with the broader market's bearish phase. Again, these names are not going to outperform all of them really for all the length of time of that bear market. So you want to be certainly aware of those charts, but it is of note that MCD is sitting up here very close to a 325 possible base breakout. We have a positive RSI and a positive MACD. Now, let's take a look at another stock back in that 08-09 period, and then I will share with you the current chart, and that is, of all names, H&R Block, having just completed those taxes last week, front and center. But here we are with HRB 2008 into 2009. Now, again, of note is that it did get caught in this bear market and did not experience that follow-through day. It's more of note that it does have that capability to withstand downward pressure elsewhere. Let's take a look at the current chart with H&R Block, and it has been on a tear. The stock or the company has partnered with OpenAI so that their 800 plus individuals that help people with their taxes are going to have that AI added capability to really improve their service. Markets like that, and you can see that sharp uptrend shaping up there in H&R Block. Last name here, going back, taking a look at historical precedent. We can take a look at ROST, and you can see this is '08 into '09. We had that nice move. This is a discount retailer, and this is '08 into the beginning, and it withstood that downward pressure elsewhere and very generally outperformed. A name that is comparable, that is currently sitting up quite nicely, TJX, another discount clothing retailer. And here we are with a current chart of TJ Maxx. And this did hit a new high earlier this week and has pulled back very orderly to this upward trending 10-day simple moving average. And I know I said the last one, but I do want to share with one other name. And this is a name that someone had a question about 2 weeks ago, and I'm going to take a look at the chart now because the current situation has turned constructive. So again, last time we're going back to this '08 into '09 period. We are taking a look. Now, this is rather dicey, but we are looking at Walmart WMT. This is taking into account all of that '08 into '09, not as constructive looking as certainly I was hoping, but we can take a look at the current chart now where it stands into yesterday's close. Here we are with Walmart. Now, at the time 2 weeks ago, we were looking at Walmart. They had just come out with earnings. They had guided lower, and those tariff fears were really enveloping investors. So the stock was very much in a downtrend. It did continue to trade lower, but let's take a look. The stock has reversed that downtrend. We are closing back above that 50-day simple moving average. Let's take a look at this RSI and MACD. And there are and was a development with this company, the latter part, not last week, but the prior week, and management came out and they talk about their profit margins, and there was generally a bullish statement. And in essence, it did shift investors' outlook relative to their growth prospects. So Walmart setting up here quite nicely going into this beginning of the second quarter. And also we did talk about, let's take a look again at this consumer staples industry group. And of course, this is a nice high yielding area. A lot of the companies underlying the staples area are going to be offering products that individuals need regardless of a possible recession, higher inflation. But I will tell you, there is one industry group that is really shifting their product that they are bringing out to the broader markets, and they are seeing growth in a formerly stagnant area. And by that, I am going to be talking about some of these tobacco companies that have shifted. We are now in what is being termed a smokeless period. So we can take a look at two names in particular. First up here is Altria. MO is the ticker symbol. And the company has a nice 7% yield. So that is of note. But even more important is the fact that they're one of their newer products that is gaining quite a bit of traction is known as a nicotine pouch. It only uses tobacco-derived nicotine, which is easily accessible for individuals. And it has been, again, sales have really been rising. There's just been a general rising demand for smoke-free alternatives for nicotine. So this is a name that's sitting up here quite nicely. Another name is good old Philip Morris. And what we can do certainly from here is take a quick look at the monthly chart of Philip Morris. And you can see that we began to decline in 2017, had a little bit of a lift off into this 2020 bear market. It was one of those outperformers in the staples space, flat performance for several years, but we have seen this liftoff again, all about this new product shift. And Philip Morris does offer a nice 3.3% yield. One of their major products is ZYN, and it is the oral nicotine tablets, I believe, that again are really have picked up quite a bit in popularity and are continuing to see growth. In addition to that nice defensive move into these higher yielders. Last up here is British BTI is the ticker symbol. This is British American Tobacco, and it too is participating in that trend and that move into a smokeless environment. This company also offers a nice 7% yield. So other areas in consumer staples, we talked about Walmart. Let's take a look at some of these other names in staples that are continuing to fare quite well. This is Sprouts. I've talked about this several times. The stock is now back above each of its simple moving averages. We now have what's called a golden cross, where that shorter term moving average moves above the longer term, very much upward trending with this MACD. You're not going to see quite a lot of names that have that upside momentum in this market that's quite difficult. Also, we do have a nice positive RSI. Another name in this same group is Kroger, known out here as Ralph's Supermarket, among others. And it had a very sharp advance here, certainly on Friday, up 3.2%. Nice high volume, that black line up through the red with that MACD, signaling a new uptrend. It is extended. We're not in a period, regardless of what group you are looking at, where you are going to be paid to chase stocks. The volatility is real. And then last up, let's take a look at another staple type of a name, and that is Calavo growers. And these guys produce avocados, very, very big out here in California, very well known, not quite as popular perhaps elsewhere, but I will tell you that the company is going to be tariff immune. It is based out of California. Their products remain in high demand, and we can see that Friday's sharp 6% rally has pushed that MACD into a bullish uptrend. We do have a nice RSI that is rising. Next up, let's go ahead and take a look at another area. Last week, for those of you that have not seen that chart or the show, I did review Trump's many statements and policy shifts that really impacted the markets. That was the primary driver. And we are continuing to see that as front and center regarding why particular industry groups are going to see movement either to the upside or the downside. Last week, there was a move into some of these natural gas companies. WMB comes to mind. It did fall sharply here on tariff fears, reducing the demand. However, in closer inspection, there is a sense that Trump's fast tracking of these projects that are going to supply energy to AI related projects will generally be bullish for this group. Most pipelines do have very long-term contracts with clients, so that does provide a nice basis for the fact that they will see a continued income stream using contracts that have already been signed and are in place. One other name that we can take a look at in this group is ENB Enbridge. Again, that V-shaped recovery. We are poised to hit a near-term high here, but a lot of nice high volume on the buying. So a lot of conviction going into this. And then these stocks also offer a nice yield. ENB has 5.9% yield that it offers. Now, taking a look, I did talk about utility stocks. XLU, the overall sector, is struggling a bit here. It was rather flat last week, but we can see that net, it does have a positive RSI with that black line up through the red with a positive MACD crossover. So taking a look at CPK, and you can see that the stock experienced a nice lengthy base breakout at the end of March, pulled back with the markets, and then has managed to trade back above that base breakout level. So generally quite bullish price action here. And then with stockcharts.com, you can go ahead and ask for what's called a full quote. And from here, we are going to get that yield information. It's not overly abundant, but it certainly is a nice 2.5% yielder in that particular space. And last up, I did want to thank those of you that are leaving comments and have questions, because as always, it will help guide me as far as what I can share with you. Always, please continue to keep those comments going. Last week, there was a comment from Peter Payne relative to reminding investors, and this is an O'Neill tenet that was repeated to me many times over my 15 years working with Bill O'Neill, the fact that the 8% rule when considering selling positions, and that particular rule will be very helpful should we experience another leg down. For those of you that are nibbling in these markets, you want to keep those losses, stem those losses so that you have confidence going into any bullish phase when it develops. Everyone have a fantastic weekend. I'll look for you here again next Friday.